Let's take a look at Safaricom specifically. Bob Collymore clearly has some hard work ahead of him, where it seems he's got, a hard task in convincing skeptics that Safaricom is set for further growth moving forward. What's your view on Safaricom right now, and just how much more innovative this company can become?
Okay, in terms of innovation, it only goes on how much they keep on pouring into their research and development, and keep on trying to market. I think the battle now for the telecoms market in Kenya will shift more into how you market what you innovate. You find Celtel, Zain, when they're switching names, they had good products. They even had this product called Sokoto Tele, which was the equivalent to M-Pesa. But because of lack of marketing the product, they couldn't push it on forward. So I think Mr. Collymore, what he has to do now is to find out how to maintain the brand name and to market any new products they channel into the market further. Because in terms of pricing, in terms of income from voice, data and everything, that revenue will definitely be cut as we go into the 2011 year.
Of course, they're planning to launch the second tranche of that 4.5 billion shilling bond near the end of November this year to dedicate towards capital expenditure. What do you anticipate uptake to be like after the way the first tranche was received?
Basically, it will depend on their pricing.
Yeah.
We're in a market where rates are so low, where you net a 91-day treasury bill giving you 2.18%. A bond of the same nature might be giving you less than the 9%, 8%. So it's basically how they're going to price their bond. If they price it very well, it will be taken up, but there's sufficient liquidity in the market.
Well, taking a look at some of the forecasts that we've got out there, expectations are for that coupon rate of 12.25%. Well, that was the first tranche, and analysts expecting the second tranche to be priced between 8 and 8.5%. Of course, we'll be looking forward to Safaricom's results next week. In the meantime, this morning, Kenya Airways out with numbers as well, and the market had been heavily anticipating those figures. What have you made with the kind of profit this company's managed to rake in?
If you go historically on Kenya Airways, their turnaround actually came around the same time with the turnaround of the Kenyan economy plus the tourism sector. So they are a company that is heavily linked to the tourism industry in Kenya. So every time you hear good news about the tourism industry in Kenya, you can literally translate it to Kenya Airways, since it is the national carrier and they have a commanding market presence in flights coming into Kenya and in the region. So as tourism has been rapidly growing and recovering this year, we actually expected Kenya Airways to follow suit. If they hadn't followed suit, then we are going to smell a bit of trouble on their side. But they've actually showed that they are still a dominant player in terms of bringing passengers into Nairobi and out of Nairobi. So as we go along, we expect them to maintain that as long as the tourism sector also is booming.
Well, of course, also of benefit is the fact that we've finally seen that hedge to the fuel price rolling off. What's your outlook for this company moving forward and the kind of expansion strategy it's got in place in terms of extending its regional route, Reginald?
For Kenya Airways, again, I'll still peg it on how tourism will behave in Kenya and in Africa as a whole. The strategy to take hold of the region is a very good strategy, because there are not many competitive airlines that can actually compete with them in the region. And as they focus more on the region, at least they cover whatever competition and effects they will get from the international routes, where they face competition from cheap airlines like Egyptian Airways, Ethiopian Airlines, South African Airlines, who do also those routes. So if they focus on their strategy, of the African strategy, price their product well, they will be able to maintain their profits going into 2011, 2012.